Hi, I'm Kerry Artak, Chief Analyst for WickedStocks.com. The video you're about to watch is one of many supplementary videos we regularly post on YouTube in order to provide you directional clarity regarding broader market trends across a wide range of American and international stock markets. But you should also know that at WickedStocks.com we provide regular daily market analysis in the SPY, that is the S&P 500 Spider ETF, the Triple Q, that is the NASDAQ 100 ETF, regular weekly analysis in the DIA, the Dow Jones, the IWM, the Russell 2000, and Gemini Bitcoin. And we also provide several individual stock picks a week, all of which can be found on WickedStocks.com. We're presently running half off your first month introductory offer. Subscriptions start at $25 a month and top out at $50, and you can receive half off those numbers by going to WickedStocks.com, clicking on the premium membership icon, and entering the coupon code HALF-OFF. Our company mission is that our technical analysis bring clarity to your trading by sharpening your sense of market timing and direction, and I think we consistently accomplish that. Let us become an indispensable part of your trading strategy. Go to WickedStocks.com and become a premium member. You won't regret it. Hi, this is Kerry Artak with Wicked Stocks, bringing you an individual stock pick in Micron Technology, Inc., symbol MU, recorded Thursday, March 10th, 2022. As usual, I'm going to show you the fundamental data courtesy of Yahoo Finance. You can scroll back and have a closer look at that if you like. I'm going to jump right into the charts. We did put out a Micron Technology a stock pick back in November, about 6 months ago or so. Let's zoom in here on this red area, and I'll show you what we were looking at the time. You could actually search wickedstocks.com to find that video yourself and watch it. I do believe it was a free pick that we put out on YouTube, not a premium. But anyway, you can see here that this was our buy signal at the time. That was, I think, the third week of November when we closed above this formation, anticipating this rising channel top as a possible 3 to 5 month objective. As it turns out, we merely retested the April 21 high in the upper 90s, 98 and change in April, and we put out a 99 and change. I don't have the exact number in front of me. We took it out by a bit and have been falling off ever since. And so we've, on this weekly chart, we've been in this sort of lower low, lower high dynamic. And this is, it's obviously not an indication of, but a reflection of a market that is corrective and on its way down, possibly to meaningful, I'm going to say long-term support. I'm going to zoom in here just a little bit and show a mostly horizontal channel bottom that this week is at 66.49, and that is rising 4 cents a week. So you can monitor the location of this meaningful floor of support this week at 66.49 over the next month or two. As long as we don't retest or take out those highs over the last year, then this is a good formation to keep an eye on. It is good bottom picking territory for Micron. This is an area, this is a weekly chart, so we can bottom out here through Q2, possibly into later year. And from here, we can rally back into the upper 90s again. So if you're given the opportunity to buy that 66.49 channel bottom, we could rally back into the 98.99 handle within a matter of 3 to 5 months or less. And that would be a return of, about 50% off those price points. Now, for those of you who trade Micron a little nearer term as well, whether you're a day trader or a swing trader or you hold positions for several weeks, you should know there is a descending channel bottom presently, about 2 months in the making, that is at 73.57 this week. We came close to testing it, 73.81, the low so far this week. We've not really bounced off it. It's dropping 32 cents a week. This is a formation you can watch. I think there's another way to view this, that if we close below this formation, 73.57 this week, next week it'll be 73.35, so forth and so on. If we close below it, even on a daily basis, I'll say that within a matter of 3 to 5 days, we can continue south to that 66.49 longer term support, where once again we can bottom out through Q2. Until then, you could bottom pick perhaps 73.57 aggressively if you're an aggressive near-term trader. Certainly if you're a day trader, swing trader. From there, who knows? We could perhaps from here rally back into the upper 90s off of this 73.57 formation. In fact, I'll show you that channel top here right now. Holding above 73.57 will allow the 95.53 descending channel top over the next, I'm going to say, 3 to 5 weeks. Could be sooner. but say by the end of April, we could reach the 95.53 formation, perhaps. There's no clear indication of it. It's just that we're holding above the near-term channel bottom, and from here we just might muster a recovery into the mid-90s, dropping 32 cents a week. So you can keep your eye on that. But the real purpose in all of this is really to apprise you of the fact that you've got 66.49 as a pretty strong support area, and that's a good zone to buy, especially if you're anywhere from a 2 to 3 week to a 2 to 3 month, and even a longer term investor. This is a good area to bottom pick. Now, I'd be remiss in not telling you that if we were to close below 66.49 at the end of any week, and FYI, I think you should add a 1% violation on that. I don't have the math in front of me, but it's pretty simple. In this situation, you would take 66.49 minus, 0.66. And that would take you into the upper 65 handle as a 1% zone of violation. In other words, were we to close the week below 66.49, and for technical clarity, I would want to see it by a 1% margin at least. Otherwise, you run the risk of the market bottoming out still in that zone. But if we close below 66.49 by the 1% margin, then I think we can expect, I'm going to say, several months bearish continuation to this very respectable longer-term channel bottom that goes back some 7-8 years now to 49.30. And so, if we were to close below the 66.49 formation, that would be a sign that, if you did say buy 95 calls that didn't expire for 6 months or so, once we test 66.49 and then we close below 66.49, well, then you'd want to liquidate those calls. And I think, probably buy 50 puts that wouldn't expire for at least 3 months. I think it could take 2 to 3 months to get down to that 49.30. Could be much quicker. This is a classic sell signal if we were to close below 66.49. So we could maintain a pretty accelerated downside pace to 49.30. That could be in as little as 3 to 5 weeks. So, but I would recommend, under that scenario of closing below 66.49 at the end of any week by a 1% margin, you could enter, could buy 50 puts. And I wouldn't advise that they expire any sooner than 3 months, because you could be right on direction and then wrong on the option. In other words, as that market continued south to $50 roughly, that 50 put that might only expire a month from now would still not show any appreciation on the way down because of the time decay element, of course. And this is sort of the big picture. This shows everything, but in a more shows everything for Micron over the last 30 years or so. And I think that's the image I'll leave you with. That's all I've got for this particular stock pick. Thanks for watching. If you're not a premium subscriber to wickedstocks.com, consider becoming one. And that's really all I've got for this particular stock pick. You have a great day.